Is the AI revolution on the brink of a meltdown? The world has been soaring on the wings of artificial intelligence with tech titans at the helm. But recent events have thrown a massive spanner in the works. Nvidia, the crown jewel of the AI surge, just plummeted, sending shockwaves through the tech landscape. This isn't a minor hiccup, it's a seismic event that's got everyone buzzing, and it's dragging the entire sector down with it. Stocks are in freefall, and investors are in a frenzy trying to decipher the chaos. The ripple effects are reverberating across the globe. What does this mean for your investments? If you're heavily vested in tech stocks, you're likely feeling the pressure right now. But hold on, don't hit the panic button just yet. Are we witnessing the implosion of the AI bubble? Some experts are drawing eerie parallels to the dot-com crash of the early 2000s. But is this the demise of the AI dream, or merely a temporary setback? Stay tuned, because in the next few minutes we're going to dissect why Nvidia and other AI behemoths are crashing. We'll explore the root causes and the far-reaching implications for the tech industry, and more crucially, what you should do to shield your portfolio and even capitalize on this downturn. There are strategies you can deploy to safeguard your investments and potentially emerge stronger. If you only watch one video today, make sure it's this one, all the way to the end. We're going to equip you with the knowledge you need to navigate these stormy waters. The world is abuzz about AI, but is Wall Street getting cold feet? The initial euphoria is giving way to caution, and it's vital to understand why. We'll separate the hype from reality and provide you with the insights you need to navigate this volatile market. From market trends to expert opinions, we've got it all covered. Whether you're a seasoned investor or just starting out, our analysis will help you make informed decisions. We'll analyze the factors driving this dramatic decline, from rising interest rates to fierce competition. These elements are creating a perfect storm that's shaking up the market, and even whispers of a groundbreaking technology that could render Nvidia obsolete. But before we dive in, hit that like button. Let's get 1,000 likes on this one. Share the video with your friends and subscribe so you don't miss out on the next important financial investing update. Alright, let's jump right into the thick of it with Nvidia, the 800-pound gorilla in the AI room. Nvidia's stock has been on an absolute tear lately, soaring on the back of the AI gold rush. Everyone wants a piece of the AI pie, and Nvidia's chips are the picks and shovels of this new frontier. But even gold rushes have to cool off eventually, and that's exactly what we're seeing now. The recent crash in Nvidia's share price has sent shockwaves through the market. Investors are wondering, what caused this sudden downturn? Well, a confluence of factors have conspired to bring the chip giant down to earth. One of the biggest culprits is actually good old-fashioned profit-taking. Nvidia's valuation has reached astronomical heights, and some investors are deciding to cash out while the going is good. This selling pressure is putting downward pressure on the stock price. But there's more to the story than just profit-taking. Rumors have been swirling about a potential disruptor on the horizon, a company called Deepseek. This mysterious new player is said to be developing a revolutionary new AI chip that's even more powerful and efficient than anything Nvidia has to offer. While details about Deepseek's technology are still shrouded in secrecy, the mere possibility of a competitor dethroning Nvidia has some investors spooked. Deepseek, a Chinese AI app, has skyrocketed to the top of the US App Store, raising a critical question. What if companies don't need to spend nearly as much as expected to develop advanced AI models? Deepseek reportedly built an AI model comparable to OpenAI's ChatGPT, but here's the twist. It may have cost only $5.6 million compared to the tens of billions US tech giants are pouring into AI infrastructure. This revelation has sent shockwaves through the semiconductor market. Stocks for major chipmakers like Nvidia, Broadcom, and Marvell Technology have dropped over 10% in the market. Nasdaq futures are also down nearly 4%. Investors are questioning whether AI's future growth will live up to the hype these companies have been riding on. But here's where it gets interesting. Analysts are split. Some, like Raymond James's Srini Pajjuri, argue that Deepseek's success could significantly lower the cost of training AI models. If true, this might reduce the demand for massive GPU clusters, a major revenue driver for companies like Nvidia. Others, like Bernstein analyst Stacy Rasgon, caution that the $5.6 million figure for Deepseek's development is misleading. He points out that it doesn't include the extensive research, data, and experiments behind the scenes. Deepseek's innovative mixture of experts model is designed to be far more cost-efficient, but building it likely wasn't cheap. On the bright side, some analysts see a silver lining. Cantor Fitzgerald's C.J. Muse believes that as innovation drives down costs, AI adoption will only accelerate, creating more demand for chips in the long run. Meanwhile, Raymond James's Pajjuri suggests that cheaper models like Deepseek could actually push US tech giants to double down on their AI capabilities to stay competitive. And while training costs are in the spotlight, inferencing, using trained models to make decisions, remains a massive growth area. Analysts predict that as training costs drop, more companies will explore new AI applications, boosting the need for chips to handle this inferencing demand. So, is Deepseek's success a game changer? Absolutely. But whether it spells doom for semiconductor companies or sparks the next wave of AI innovation remains to be seen. What's your take on the future of AI development and its impact on the tech industry? Let us know in the comments below. Remember, in the world of tech, disruption can happen at lightning speed. No one wants to be caught holding the bag when the next big thing comes along. And if that wasn't enough, we also have to factor in the broader market forces at play. Inflation is proving to be more persistent than expected, forcing the Federal Reserve to keep interest rates higher for longer. This makes it more expensive for companies like Nvidia to borrow money, which can impact their growth plans and ultimately hurt their stock price. Plus, there are growing concerns about a potential recession looming on the horizon. In times of economic uncertainty, investors tend to flee to safety, dumping riskier assets like tech stocks in favor of more stable investments like bonds. All of these factors combined have created the perfect storm for Nvidia and other AI stocks, leading to the dramatic sell-off we've seen recently. Now, Nvidia isn't the only AI player feeling the heat. C3.ai, a company that provides enterprise AI software, has also seen its stock price take a tumble. C3.ai is heavily reliant on Nvidia's chips to power its AI solutions. So, when Nvidia sneezes, C3.ai catches a cold. This dependence on a single supplier makes C3.ai vulnerable to any disruptions in Nvidia's business. And with the Deepseek rumors swirling, investors are understandably nervous about C3.ai's future prospects. If Deepseek's chips do live up to the hype, C3.ai could be left scrambling to adapt, potentially losing market share to competitors who are quicker to embrace the new technology. SoundHound AI, another company riding the AI wave, has also experienced a sharp decline in its stock price. SoundHound specializes in conversational AI, the technology that powers virtual assistants and chatbots. While conversational AI is a rapidly growing field, SoundHound faces stiff competition from tech giants like Google, Amazon, and Apple, all of whom have their own virtual assistant platforms. This intense competition makes it challenging for smaller players like SoundHound to gain a foothold in the market. The recent market downturn has only exacerbated these challenges, as investors become more risk-averse and less willing to bet on smaller, less established companies. Even BuzzFeed, the digital media company, hasn't been immune to the AI stock sell-off. BuzzFeed recently announced plans to incorporate AI into its content creation process, sending its stock price soaring on the news. However, the excitement was short-lived. As the broader AI sector began to falter, BuzzFeed's stock price came crashing back down to earth. This highlights the fickle nature of the market, especially when it comes to emerging technologies like AI. Investors are quick to jump on the bandwagon when a new trend emerges, but just as quick to jump off when the going gets tough. Now, it's not all doom and gloom in the world of AI. Microsoft, a tech behemoth with its fingers in countless pies, has also been investing heavily in AI, most notably through its partnership with OpenAI, the creator of ChatGPT. While Microsoft's stock price has been affected by the recent market volatility, it has fared relatively well compared to some of the pure-play AI companies. This suggests that investors still have confidence in Microsoft's ability to leverage AI to drive future growth. However, even Microsoft isn't completely immune to the challenges facing the AI sector. So, with all this volatility in the AI space, you might be wondering, how do I even begin to navigate this market? It's a daunting task, no doubt, especially when every day seems to bring a new headline about the latest breakthrough or the next big failure. It's a valid question. The AI landscape is evolving at breakneck speed, and it can be tough to separate the winners from the losers. The rapid pace of innovation means that today's cutting-edge technology can become obsolete almost overnight. One minute, a company is on top of the world, and the next, it's struggling to stay afloat. We've seen it happen time and time again with giants like Nokia, Blockbuster, and Kodak. They were once untouchable, but they failed to adapt to changing landscapes. That's why it's crucial to have the right tools and information at your disposal. Just like a prospector needs a reliable metal detector to find gold, investors need robust analytical tools to sift through the data and find valuable insights. You need to be able to cut through the noise and identify the companies that are truly positioned for long-term success in the age of AI. This means looking beyond the flashy headlines and understanding the fundamentals of each business. And trust me, it's not as simple as just following the hype. Hype can be misleading and often leads to inflated valuations that don't reflect the true potential of a company. Remember, the market is forward-looking. Investors are always trying to anticipate what will happen next, rather than reacting to what has already happened. By the time a trend is splashed across the headlines, it's often already priced into the market. This means that the real opportunities lie in identifying trends before they become mainstream. To stay ahead of the curve, you need to anticipate the next big thing before everyone else does. This requires a combination of foresight, research, and sometimes, a bit of intuition. It's about seeing the potential in emerging technologies and understanding how they can disrupt existing markets. That's where Forecaster comes in. Forecaster is the ultimate tool for uncovering high-value investments in any market, especially one as dynamic as AI. Our cutting-edge algorithms analyze massive amounts of data, from financial statements to industry trends, to identify companies with the potential for explosive growth. We even factor in things like social media sentiment and news coverage to gauge market perception and identify emerging opportunities. Forecaster isn't just about crunching numbers, it's about providing you with actionable insights that can help you make smarter investment decisions. We cut through the jargon and deliver clear, concise analysis that you can understand, even if you're not a financial expert. With Forecaster, you'll be equipped to navigate the complexities of the AI market and position yourself for success. And the best part? You can try Forecaster absolutely free today. That's right, you can access all of Forecaster's powerful features and start uncovering winning stocks without spending a dime. Just click the link in the description and use my code Galore10 for an exclusive 10% discount if you decide to upgrade to a premium plan. Don't miss out on this incredible opportunity to take your investing game to the next level. Head over to the link in the description and start your free trial of Forecaster today. So we've seen some heavy hitters take a tumble. What do you do if you're holding on to some of these AI stocks? First things first, don't panic. Remember, the market moves in cycles. What goes down often comes back up, especially in a sector as transformative as AI. It's crucial to take a deep breath and assess the situation rationally. Ask yourself, are your investment reasons for buying into these companies still valid? Has anything fundamentally changed about their long-term prospects? If the answer is no, then riding out the storm might be the best course of action. However, if you're feeling uneasy about the current market conditions, there are a few things you can do. One option is to diversify your portfolio. Don't put all your eggs in one basket, especially in a volatile sector like tech. Consider investing in other industries with strong growth potential, such as healthcare, renewable energy, or infrastructure. Another strategy is to look for buying opportunities. Market downturns often present a chance to pick up quality stocks at a discount. If you believe in the long-term potential of AI, this could be a good time to add to your positions in companies you believe in, but at a lower price. Now let's talk about the bigger picture. Is this recent downturn just a blip on the radar, or is the AI bubble about to burst? Well, it's important to remember that AI is not just a fad, it's a transformative technology that is already revolutionizing countless industries. From healthcare to finance to transportation, AI is poised to reshape the world as we know it. And that means there will be winners and losers along the way. Some companies will thrive, while others will falter. The key is to identify the companies that are best positioned to capitalize on the AI revolution. Remember, investing in the stock market always involves risk. But by staying informed, diversifying your portfolio, and focusing on the long term, you can weather the storms and come out ahead. So, there you have it. We've dissected the reasons behind the recent AI stock crash, delving into the intricate details that have led to this unexpected downturn. From regulatory changes to shifts in investor sentiment, we've covered the gamut of factors influencing the market. We've also explored the potential impact of Deepseek, a groundbreaking technology that promises to revolutionize the AI landscape. This innovation could be a game changer, offering new opportunities and challenges for investors and companies alike. In addition, we've discussed what you can do to navigate this turbulent market. The AI sector is in a period of rapid evolution, and with that comes volatility. But amidst the fluctuations, there are strategies you can employ to safeguard your investments and capitalize on emerging trends. It's important to stay informed and adaptable. The market's ups and downs are part of a larger cycle, and understanding this can help you make more informed decisions. But, amidst the fluctuations, remember the bigger picture: AI is here to stay. This isn't a fad, it's a technological revolution that will reshape industries and redefine the way we live and work. The companies that succeed in this new era will be those that adapt, innovate, and deliver real value in a world increasingly driven by artificial intelligence. While the recent market dip might feel unsettling, it's crucial to remember that market corrections are a natural part of the investing cycle. Don't let short-term fluctuations overshadow the long-term potential of this transformative technology. The key is to stay focused on the long-term vision. The companies that will thrive are those that can see beyond the immediate challenges and invest in innovation and growth. They will be the ones to set new standards and lead the way in this AI-driven world. Innovate and deliver real value in a world increasingly driven by artificial intelligence. While the recent market dip might feel unsettling, It's crucial to remember that market corrections are a natural part of the investing cycle. Don't let short-term fluctuations overshadow the long-term potential of this transformative technology. Stay informed, stay strategic, and remember that fortune favors the bold, especially in the fast-paced world of AI. The future is bright for those who are willing to embrace change and take calculated risks. The journey ahead is filled with opportunities and challenges, but with the right mindset and approach, you can navigate this landscape successfully. So, keep your eyes on the horizon and your strategies sharp. Full steam ahead. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members there get full, in-depth analysis on most of these stocks I mention here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. The link is in the description. I hope you found this breakdown helpful. If you did, make sure to smash that like button and subscribe to the channel for more insightful videos on navigating the world of investing. And as always, do your own research before making any investment decisions. Until next time, happy investing.